Good afternoon, everybody. Scott G with the Simple Trading Life here. It is Tuesday afternoon, and we are getting ready for our regularly scheduled live stream at 2 p.m. So let me get ES, the E-minis, up on the screen here. We'll kind of see what it's been doing today, as well as look at several other items. Let me get your comments up on my screen. That way you guys will be able to communicate with me. Up on my screen. Hello, everyone. See, we got a couple people in here already, and I'm sure we'll have some more joining us shortly. It's a beautiful, beautiful day here in Atlanta. Going to top out at just around 80 degrees today. I've already been out and walked almost 3 miles. I wanted to get out and walk this afternoon, get some sunshine. And when I walked, it was about 70, 71. So down here in the south, the heat of the day is usually closer to like 4 or 5 o'clock in the afternoon. So I wanted to get my walk in early today. All right. See several of you. Stacy, Riz, and Al. Welcome to all of you. Good to see you guys in here. Hopefully we'll have a good group today. Got me my second cup of coffee today. I usually only drink 1 per day at about 6:30, 7 o'clock in the morning. That's usually the only cup I have, but feeling just a tad sluggish, tired after getting my walk in. Came back, showered, sat down and rested for just a little bit. So ready to go, ready to go. So as we can see here, ES trying to get above this wick right here. So what we had, I want to show everybody this. This is a 30-minute chart. Now, you can switch to a 1-hour chart, but a 1-hour chart on most platforms, not every platform, because I have different brokers and every broker is different. But on Thinkorswim, the hour updates at the top of the hour. All right, so this would be a 9 o'clock candle if it was an hourly chart. What I prefer is what they call the reverse 1-hour chart, where it updates at the bottom of the hour. Now, if you have a platform that doesn't do this, the very simple trick is that you just combine every 2 candles on the half hour. So this would be 1 hour, this is 1 hour, this is 1 hour, this is 1 hour, so on and so forth. So what you'll see is, let me just double check here. I think this one just barely got outside. It did. What we had on the reverse 1-hour chart was we had an inside candle right here. Okay, because remember, these two are one and they're inside of these two. And when we say inside, we mean it didn't take out the top or the bottom of the range. So now what we're looking for is any break above here. We barely poked above there, we poked, came back, and now we're trying to pop. Because if we get a break above here, there's a good chance that we run at least till the top of this candle and maybe up into this wick, right? Okay, because there's just not a whole lot there to stop us if we can get going. Now this blue line here, okay, those in my room probably already know what it is. If you're new and you're not sure, it is the midpoint, the 50% point of this entire move down today. So from this highest point to this lowest point, this is exactly 50%. We know that a high percentage of the time after a strong move, or sometimes just one chaotic candle, we will retrace at least 50%. So in my room, I always tell everybody you can map out where 33%, 50%, and 66% is. That's just a really general rule of thumb. If it gets to 33% and turns back down, it's typically going to continue on in the same direction it came from. about 70–75% of the time, it's going to make it back to 50. And from there, it can go either direction. Okay, but just knowing that it's going to get back there that often is important to know. If it makes it all the way to the 66% mark, you're about 85% likely that you're going to continue on in this direction and go all the way back up to at least the origin of the move. So that's what that blue line is. That is the 50% retracement of this entire move down from here down to the lowest point here. Okay? So I know anybody who's new might be wondering what that is. And if you're new, this purple dashed line, that was opening price level. It's where we opened up this morning at 9:30. And as you can see, other than this tiny little pop up, all of our price action has been below. In fact, we sold off. So we went, let's see, from 29.0850 to a low of 28.54. So what is that? That's about $55, right? Approximately. $54 maybe. All right, so we had a nice move away this morning. Nice move away. This was a measured move. Okay, if anybody's ever heard me use that term or heard somebody else use it. Okay, you can combine these two candles here. Then we had a resting candle. Then when we take the bottom of this out, we can expect this candle to move similar magnitude. Now, it actually moved more, but usually it's going to be similar magnitude as what came before the resting candle. So as you can see, it actually moved more, and then it turned around, headed back up, and we formed structure back down, and now we've been moving up. Okay, so that's where we're at on ES, and as you can see, we're just now here in the last hour or so reclaiming the 20 simple moving average. Okay, here we fell below it. We moved away pretty dramatically. We talk about this a lot, not only in the room, but on these live streams. Whenever price moves in a manner other than, say, a 40 to 45 degree angle, when you start talking about 60, 75, 90 degree away from the 20, it wants to then retrace back over to the 20. Now, sometimes it'll just come over and bounce lower. In this case, we've actually reclaimed it and we're trying to go higher. So again, that's just something to keep in mind. Little tip for you there. Okay, a lot of people will play counter trend plays where a trend may be to the downside, but when they see that price is moving significantly away from the 20, they'll look for the first green candle going back that direction, and they'll try to play a move back towards the 20. So that's a typical counter trend play that I don't play that. That's not me, but there are a lot of people that like to play that. Okay, we're still watching to see, are we going to get above here? And if we do, we should see a pop up into this area up here. It's moved up here a couple of times and then it pulls back. Moves up, then it pulls back. So we'll see. Obviously, the pressure, the selling pressure has been to the downside today. See, we had several more people join us, so welcome, everybody who's new. We're still just getting started looking at ES here. This is the S&P 500, the E-minis. So this is basically our look at the overall market. No matter what you trade, if you only have one screen, you should have it somewhere. Like for me, I just keep it right here where I can always see it at the top of my watch list. I have oil and I have ES up there. Oil, it doesn't matter for the overall market. But ES, anything else I might trade, I want to know what ES is doing. If you have multiple monitors, you maybe just keep a chart up on another screen. You should also always know when you're going to trade something what the monthly, the weekly, and the daily charts of that particular instrument are doing. Okay? In a perfect world, you're looking for something that we call higher time frame agreement or confluence, meaning they're all moving the same direction. So if you'd have the monthly, the weekly, the daily, all going in the same direction you're trying to trade on the 30, the hourly, the 15-minute, you have a much higher chance of success. The probabilities start to become stacked in your favor. Hey, Cathal, good to see you. Cathal and Al and Riz and Stacy are all from our Simple Trading Life community. If you're brand new, you can check us out at simpletradinglife.com. You can see it at the top of the screen. That'll give you some insight about us, and we have a free chat room and we have a premium room, so you could check us out there in either capacity. Obviously, I spend a lot more time in the premium room, but we do have a lot of really good content in the free room, and I'm constantly posting chart updates. Here we go. We're getting the pop, by the way. See that? We finally cleared that. It's trying to pop. I post chart updates in there. Every once in a while, I'll take a day and I'll do updates in there, sort of like I do in the premium room, just to give them a flavor for what we do in the premium room every day. In the premium room, we do live streams like this at least 3 times a week on Mondays, Wednesdays, and Thursdays at 2 p.m. But that's just for the premium members. And we're typically on about 45 minutes to an hour. Some days we're just looking at the charts, looking at names. Other days we're teaching. You know, right now we've really been stressing price action. Because to me, that is the most important thing to trade. Price action, support, resistance, supply, and demand. Those are the 3 most important things. We do a lot of teaching in there. We go over names that are on our watch list. We'll go over a few names that were on our watch list today on this YouTube live stream as well. So right now we're watching to see what ES is going to do here. You know, once it got up here, got this little pop. Okay, the high there was 28.77.75. Okay, so it's already popped a couple of bucks. And we're expecting it to get up into this area up in here. If it clears here, we would expect it to get up into this wick. Okay, because we've already cleared the 20. So in our terminology, we talk about obstacles. What are potential obstacles? Okay, they could be support and resistance levels. They can be moving averages. They can be the top of a big candle like this, because that's where it started, right? This move down started at the top of this candle. Or it can be medium to large wicks, or shadows if you prefer to call them that. Some people might call them topping tails or bottoming tails. Whatever your terminology, medium to bigger size wicks are also obstacles, because they show selling or buying pressure. You know, if they're on the bottom, they show buying pressure. If they're on the top, they show selling pressure. All right, so let's do this. I'll put an alert right up here around halfway. Give me 1 second here. And then I'll put one down underneath this candle in case price would reverse. And then we'll go look at some other things. All right, so we're going to look at a couple of general names first. We're going to look at some things that were on our premium watch list. I put that out every day on Twitter, on our Facebook page. I also put it out in our free room. The only difference is it's the same exact list that I give to the premium members, but the premium members know exactly why everything is on that list. I don't explain to everyone on Twitter and Facebook and in the free room why they're on the list, but I do give them the list. That way they can look at some of those names. There may be some plays that they potentially want to take or research. But in the premium room, there is a specific reason why every name is on the watch list every day. Now, Apple was not on the list today, but let's just take a look and see what Apple has done today. A lot of names today did what they call a gap and crap, or a pop and fade, you know, however you want to characterize it. Because the market was up overnight, a lot of names were up today at market open. So when we say, you know, it gaps and fades, okay, it gapped up, right? Here's where it closed yesterday. Here's where it opened today. Popped higher, came lower. This is kind of where it settled in, and then you see it just fade away, right? So the early part of the day, most names, not every name, we'll probably look at a few, most names were following the market down. About 80 to 85% of the market is going to do exactly what ES or SPY does. All right, so that's exactly what Apple did. And then just like the market, caught a little bit of support and it's been working its way back up. It's also reclaimed the 20 on the 30-minute chart. AMD's got earnings coming up. Let's see, might even be tonight. Let's see here. Yes, tonight. AMD has earnings tonight after the market closes. So AMD gapped up, faded, caught it some support, kind of like the market, came up, came back down, and now has been moving up. So AMD, in my opinion, this is just a total opinion, and I'm not saying buy AMD or whatever, because I mostly scalp and day trade anyway. I rarely swing trade things. In my opinion, AMD might be setting itself up to be strong no matter what the coronavirus does, because they've come out with some new chips for computers, for laptops and desktops that for a long time, they've kind of been Intel's little brother. So AMD, they were considered quality, but always just performance-wise, just a little bit behind Intel. Well, they've come out with some new chips that, as of right now, Intel might come out with something eventually that tops that, but AMD has come out with some new chips that are just phenomenal. And so there's some laptops out there that are now running these brand new AMD chips, and they're calling them Intel killers, right? So Intel obviously hasn't had the best couple of weeks. AMD has come out with these new chips that are performing better than the i7s, the i9s. I think it's called the Ryzen, R-Y-Z-E-N. I believe that's what the chip is called, and it comes in different numbers. But it's an 8-core chip. Most Intels are either quad or 4 or 6. The Ryzen is an 8. And from a performance standpoint, it's performing better than the best Intel chips out there, and it uses less power. So it's using less power from your computer, and it's performing better. So that's a good thing for AMD. And then the other thing that was negative for Intel was Apple announcing that starting, I believe it's in 2020, they're no longer going to use the Intel chips. They're going to start using their own chips. So a couple of blows to Intel, and we'll see how Intel holds up in the long haul. But in the short term, or let's say near term, AMD might see some positive movement because of this in their stock. So anyway, I'll be watching it. I trade AMD quite a bit. It's always been one I like to play. But as you can see, moving very similar to the market. Okay, now Amazon, this was one that was on our watch list. Okay, now Amazon actually gapped down. Okay, it didn't gap up. See this? Here's where it closed on yesterday. And then right here is where it opened and just faded all the way down to here. Now, this was on our watch list, and we were expecting the potential for either a downside or an upside move, okay? And again, I can't go into all the specifics, but we have triggers. Our downside trigger was hit, and if somebody would have taken that trade, now Amazon's expensive, and we understand that. Not everybody's going to play Amazon, okay? But had somebody taken the trigger and then got out, down, let's see, I can tell you where it was. Okay, got out down around here, right around here. Didn't even catch all the move. That would have been a $47 move. $47 from our trigger to where I would anticipate most people would have exited. It went lower than that, right? It went clear down to here, but most people would have exited right around here, And that would have been good for $47. So that one trade alone, if somebody can afford to play Amazon, would have been well worth it. That might have been the only trade you take all day. All right, so Amazon did not gap up. It gapped down and went straight down. It's now catching its footing, right? And just like these others have moved back above the 20 on the 30-minute chart, and it's trying to get over this resistance area, 23.2936, so it can try to go higher. All right, let's just go through here. Let's look at BA. BA is a popular name. All right, BA, big gap up. Big gap up. This is your ultimate gap and fade. Okay, so it gapped up to here, spiked up, came back down, and then down she goes. All right, little resting candle here, and then just falls off the cliff, as we say. And then it's been pretty flat the rest of the day. It's trying to get a little momentum here, trying to catch a little momentum. Baba, let's look at Baba. All right, Baba, gapped up, big fade away. Okay, it opened at, let's see here, 204.81 and has been as low as 199.40. So that's over a $5 move to the downside. So that's a pretty big move down for Baba. And I think, let's go to the daily. Yeah, Baba was on our watch list, and there would have been a trigger. Okay, now we wouldn't have caught all $5 of that. Okay, we would have caught a little less than three of that. Okay, so Baba yesterday put in an outside candle. So this candle here, this was yesterday, was completely outside of this candle. So an outside candle is definitely something you want to have on your radar. Okay, that shows that the range is expanding. And what do we mean by range? Well, you can almost look at it right here. Okay, this was outside of this, and you can sort of, just draw a line down through here. Okay, see how the range is expanding? Now you can also almost expect that it's going to at some point come back the other way and test the range that way. So that's why outside candles are important, because it's expanding the range. So a lot of people, I'm going to take these off here, but a lot of people think that ranges only contract, but they're actually always expanding. Price is always wanting to test its boundaries. When it is contracting, okay, or some people call that coiling, consolidating, whatever terminology you like to use, but whenever a range is contracting, it's building energy because it's going to pop out and it's going to test a range in some other capacity. Okay, so really, if you train your eyes, you can start to see that price is actually more often than not expanding. Okay, and then in temporary, in smaller instances, it'll contract. And when it contracts, that's when you can look for breakout plays. All right, so that was Baba, and that was on our list. Let's go down through. I'm not going to look at every single name. Beyond. I don't know if Beyond has done anything or not. Let's see. Nope, not really. Okay, so it was also an outside candle yesterday. I'll squeeze in a little bit. Okay, you see this? Completely outside of this candle, which tells us that the range is expanding. Now, if you get down here, it just barely poked its head above here, and then it started back up through. Now, if it would continue, if this candle would turn green and start going that direction, that can be a potential price action play, price action trade. Okay, even if it pokes its head out just a few pennies, that means that it has expanded the range this direction. Okay, and then if it starts going back through and you start to see it pick up momentum, and what we would mean by momentum, this is where it opened, right? And early, it probably moved this direction, then came back down through. It barely took that out, and then it's coming back through the range. Now, right now, it's a doji, which means it's opening and closing right in the same spot, right? Nobody's in control. But if this would start to go green and go that direction, that could be a potential trade, because what did I just say about price? Price is always wanting to test its boundaries. So if it tested its boundary over here and didn't go any further and now is reversing back through what we call the range, okay, it's highly likely, common sense, it's highly likely that maybe not by the end of the day, obviously, but at some point, it's going to want to come back through here and test this side of the range, right? Some people call it a reversal. You can call it whatever you want, but we know that price is always trying to push its boundaries. Okay, you always hear, and I'm not putting down other teachers or whatever. Everybody has their own style. I'm not that kind of a guy. I'm not here to say I know better and somebody else, they're horrible. And there are bad teachers out there. Trust me, there are bad teachers, but there are really good ones out there too. Really good ones. But there's a lot of people that will teach that price. How many times have you heard this? Think about this. They'll teach you that price is consolidating most of the time. Price is contracting most of the time. That's what they'll tell you. Okay. I beg to differ, and all I would say to you is, if you're somebody who's been taught that or believes that, go back and start looking at charts, and you'll see that price is always trying to test its boundaries. And actually, the times that it consolidates, like wedges or ranges, tight ranges, sideways, are actually more infrequent than you might think. Okay, they're going to teach you that it's happening, 70%. I've heard, I've read all the books and I've seen all the videos, and, most of those people are always like, price is consolidating or contracting 70% of the time, and it's only, breaking out or expanding, 15 to 30% of the time, or 15 to 20%, whatever. Okay, but in reality, again, if you start training your eye, you'll notice that it's almost exactly the opposite. And the folks in my room, I draw it out for them quite a bit, so they get to see it. And they know me. I'm always looking for the range. I'm looking for ranges. That's what I'm looking for. Okay, where most people are, they might be looking for some specific little thing. We look for specific setups as well. Don't get me wrong. But I'm looking for ranges, expanding or contracting, because you can take trades off of that. Okay, and you'll take higher probability trades off of that. Okay, like just as I scroll back through here, see how often price is moving up and down and up and down. Okay, very rarely, and I'm sure we can find it if we look hard enough, but very rarely is it actually in these tight consolidating ranges. It's not as often as you think. But if you're constantly told that, then that's all your eye ever looks for. There was a study, and this has nothing to do with trading. It has to do with the power of your mind, the power of your brain. There was a study done where, and I've actually had somebody do this to me, and you get absolutely amazed. I was at a conference, and one of the speakers did this. So hang on a second. I'm just bringing the market back up. Okay, so we popped up, but we still haven't pulled back, but we still haven't been able to go higher yet. Okay, just to show you the power of the brain. This study showed that if somebody is told something enough, even in a short period of time, your mind and your eye will start to believe it, even if it's not true. So the speaker at a conference one time, he didn't tell us what he was doing, but he just started telling us the story, and he kept using the same descriptive words over and over as he told the story. Over and over, over and over, over and over. Then at the end, when the story's over, he gives everybody a sheet of information, and he tells you to pick out certain information. Okay, I'm not going to give it away, and I don't even remember exactly what it all was. So everybody in the room, and at this conference, I'm going to say there were 60 to 100 people, something like that. Everybody in the room takes the same thing. And then he's like, okay, you give it to the person next to you, grade everybody's test, we'll call it. Well, when you get done, almost everybody picked out the same information and ignored the obvious information. And it was all because in that short amount of time, as he told this story using the same phrases and the same descriptive words over and over again, that quickly, everybody's brain in that room became trained to only look for that information. And we were overlooking stuff that was obvious. When he went back through and pointed everything out, he'll say, how many people got this? Nobody would get it, right? Nobody's hand goes up. How many people got this? Nobody's hand would go up. And then he would say, okay, how many people got this? And everybody's hand would go up, and he would say, okay, is that because I used the same phrase, and he would say the phrase 10 times during my story? Right? So you see, I tell that just so you understand why sometimes when a teacher, a mentor, a guru, whatever you want to call them, guru, tells somebody something over and over and over and over again, your brain and your eye, that's all it's going to look for. And things that are absolutely obvious, you'll be totally blind to. So that's why I say that. That's why I say that. And if you've ever, maybe somebody on here has had one of those experiences where somebody's done that to you, it's amazing, right? Because I think we all consider ourselves halfway smart. And then when it's all said and done and you look down and go, oh my gosh, how did I miss all that stuff? It was staring me right in the face because you just weren't looking for it. You were only looking for what your mind's eye was telling you to look for. That's it. Okay, now it looks like we're trying to move up again. We're starting a new 30-minute candle right here. Okay, so from this point, as you can see, we're just steadily moving our way up. Steadily moving our way up. And where, let's see, right here is where we had the inside candle on the 1 hour, the reverse 1 hour chart. Remember, if you combine these two, they're inside of these two. Okay, so once we took the top of this out right here, it would make sense that we're going to start to move up. Vice versa, if we would have came down and took the bottom of this out, it would make sense that we would start to move down. All an inside candle is a form of equilibrium. Okay, it's almost like consolidation or contraction on its own. One inside candle, and I'm sure I can find some in here, right here. Look at this, right there. I'll move it over so everybody can see it. This candle right here. Okay, actually we had two, which is even better. Okay, so this was inside of this. This was inside of this. So that's called a double inside candle. You can have triples, and I think I've seen some quadruples before too. It depends on how big the original candle is. Sometimes you can get 2 or 3, or sometimes even 4. All right, but that is a form of a contracting range, right? I'll draw it in. Okay, visualization is better than anything, right? And then from here, whoop, I don't know why it didn't. There we go. All right, so just those 2 inside candles, that is a form of a contracting range. And then what happened when it broke? Boom, big pop. And it could have went either direction. And that's another thing. You'll always hear, well, if the wedge, if the pole came from this direction and then you form the wedge or the pennant or the flag, well, then you're likely to continue that direction, or so on and so forth. Again, trade what you see. Don't anticipate. I see so many people. They'll say, oh, there's a bear flag, there's a bull flag, there's this, there's a rising this, there's a falling this. And they try to front run the trade and it goes against them. And if, I'm just making something up, but let's just say this had come from down this way, then we form this, and you're thinking, okay, well, it's going to break this direction. And you see this candle and you know, okay, it's tight. It's going to pop one way or the other, and I know it's going to go this way, and you take a trade to the downside and it goes like that against you, what are you going to do? If you don't have a stop, or, you know, these are ES, and I know on Thinkorswim they don't let you put a mechanical stop in. You have to manually stop yourself out. Well, if that happens quickly, you're screwed, right? If you thought it was going this way and you tried to front run it, all right? But again, my whole point is I'm just trying to teach everybody that inside candles on their own, what do they represent? They represent equilibrium, easy for me to say, and a contracting range. So you can expect, okay, this is on a smaller scale, right? On a 30-minute, you can expect that at some point it's got to pop one way or the other. And if you get 2, it's more powerful than 1. If you happen to get 3, it's more powerful than 1 or 2. And on those very, very rare cases that you get 4, it'd be the same thing. But you can see how powerful the move was. The move actually came clear up to here. Okay, from here, from this wedge that we just drew, the move came all the way up to here. That'd be a really nice scalp, right? You probably would have exited, you know, right about here when it started to reverse back against you. All right, 29.05, and it would have broke 29.80. So 15, right? 29.81, really. 14. $14 move. I think we'd all take that. I think we would all take that. All right, so right now, okay, price is not able to go higher. Right now, okay, it could change. We still haven't taken our alert out down here. We definitely have not taken our alert out up here. So right now, we're just in limbo, nothing to do. So let's go look at some other names. All right, so we looked at Beyond. Okay, CHK, this is Chesapeake Energy. And I want to go to a daily. I want to show everybody something. All right, I hate it when it does this, but that's okay. I can make the screen. I can expand everything. Just give me 1 second, everybody. I want to get it to where you can see. All right, so Chesapeake, I'll make it even bigger. There we go. So Chesapeake Energy. See this big move from here, $12.25, all the way up to $41.50. 1, 2, 3, 4, 5 days. 5 days it made this huge move up. How is that possible? Well, anything's possible. We already know that. But you can have news. You can also have conditions. It could be a low float stock. If I remember right, I think Chesapeake is a low float stock. You can have a high short interest, right? The short float. Anything over 25% is considered high. So if you have a stock that's 25, 30, 35, 40, 50, you know, you get up in that range, that's really high. Okay? Because what that means is if price starts to go to the top side and you have a high short float, you get what's called a short squeeze. Everybody who's short has to cover. So that accelerates price to the top side. Okay? Now, here's what I really wanted to show you. 2 things. That's how price can go up that fast, but it's also a reason that it can come back so quickly. So what did I just say before about we like price to move in a 45 degree angle, right? Ultimately, those are your best trends, up or down, 45 degrees. Nice and smooth, it doesn't get too far away from the 20. Like right here, this is sort of 45 degrees. But then you get something like this. This is almost 90 degrees. This is like 80 degrees, 85 degrees to the upside. Price has to come back. It's going to fight its way back. Okay, they call it a reversion to the mean. Okay, some people are into Bollinger Bands or Keltner channels, or you can use VWAP with wings, all this kind of stuff. And they all talk about reversion to the mean. Well, you don't even need all that stuff. If you've got a fast moving average, and for me, that's just the 20 simple moving average, and price moves away like this, it's going to come back. Maybe not all the way, but you're going to get these dramatic moves. So I know some traders who they caught this here. They caught this move to the downside, and people were like, well, how did you know? Like, look how strong price was moving to the upside. Okay? Because they're smart. They understand how price action works. So it came all the way down here in one day. So it went from a high of 41.50 to a low of 26 in one day after this meteoric climb. So whenever you see these big moves like this, especially if it happens on one candle, we call those chaotic candles. But here, look what we did. We had move, bigger move, gapped up, big gap up, and just, like I said, almost 90 degrees to the top side. You run the risk of exhaustion. And also, you see this wick here, it couldn't get over. It could not get over this wick. What does this wick show us? Tremendous selling pressure. Because remember, at one time, this was a big green candle, right? When it was up here, it was bigger than this. It was a big green candle, and then sellers came in and said, nope, and pushed it down. And look, 1, 2, 3, 4, 5, 6, 7 days. So it took 7 days to come down here. It took 5 days to come right back. That's what happens on these lower float, high short interest type stocks. Maybe not the best to trade if you're a novice, okay? Because if you easily get FOMO, if you easily get euphoria, and you start seeing this, you start thinking it's going to go on forever, and then this goes against you. And whatever you gained on the way up here, you probably give it back right there. Okay, but just know that that's one of the reasons a stock like this moves the way it does. All right, let's see here. I'm going to look at some others. Just looking for something that catches my eye. IWM. IWM has been strong here recently. Okay, so IWM is an ETF that is, they call it the small caps, right? So it's an ETF of the small caps in the market. As you can see, it's had some strength here the last 1, 2, 3, 4, 5, 6 days. Let's get in a little closer. All right, so from here, this was down at 116.48 and a high of 131.46. For an ETF, that's a strong move. Okay, so other than this day here, and here it had pushed up and then came back down, but somebody obviously, if they would have caught that going up, they're going to sell as price starts to move back the other direction. But a lot of strength. And then today, okay, we've got an hour and 15 minutes to go. Looks like it might form a hammer. And if it forms a hammer, that in itself is a bullish signal. It is a bullish signal. Now, it doesn't matter that it's a bullish signal. Could the next day, here's something that happens a lot. The next day, price starts to go up and then comes back and forms a shooting star. And we would say, in our terminology, we would say that's a shooter countering a hammer. Okay, but could you catch it on the way up and profit? Yes, absolutely. Right? And then it comes back down and maybe it forms a shooting star. Well, then we also know that whenever you get a counter to something like this, typically, not always, typically whatever countered, okay, the most recent might be the direction price will go in from there. So if it was exactly the opposite, you had a shooting star, price was moving down, you get a shooting star. We would say that's a momentum shooting star or a momentum shooter. And then you got a hammer to counter that. Like this was countering a shooting star. Then we would start to look for potential upside off of the countering hammer. Okay? Just trying to give you guys some tips and tricks. Things to look for. Okay, J&J. I know this was on our list today. And okay, you see what happened. All right, so it was on our list because we had a shooting star up here and it gapped down all the way to here. But what did it do? It just barely came down and it's been trying to work its way back. Okay, and as you can see, what do I have here? Oh my gosh, it's an expanding range. Right? I'm telling you, they happen all the time. Okay, so it gapped down here, came down, it pushed its way all the way back to the 20 and it's come back a little bit, but we got what we anticipated. Okay, when you see a shooting star, that's a bearish signal, plus we knew we were coming off of the top of this expanding range, right? Then we got a spinning top, candle of indecision. Then we got our shooting star. I'd like to see this wick be a little bit bigger, but obviously it worked because look where we gapped down to. Okay, we gapped clear down here. Now, that's a pretty big gap. So if price starts to go this direction and then comes back, now we did have an obstacle. We had the 20 here. Okay, but if we didn't have the 20 there and price starts to come back and goes through where the opening price level was, you can take that trade. That's an aggressive play, but you can take that trade. So let's see, if somebody would have done that, just eyeballing it here. 151, about $1.60. Okay, about $1.60 on Johnson & Johnson. As you can see, most of these candles, this is in line with the average size candle. Okay, so that'd be a pretty good move. That'd be a pretty good move. So this was one that was on our list. Didn't give us exactly, I mean, we got the move down, but we didn't get any continuation. What would have been beautiful on J&J is get this gap down, okay, and right here's where it opened, right? And then just continue on down, right? And we anticipate that over time, it will continue on down and it'll test the other side of this. All right, for sure here, okay, for sure here, and maybe all the way down here. We just draw these in as visualizations, okay? They're not exact. You don't have to be exact. We're just trying to catch high probability trades that give us a great opportunity to consistently profit. That's what we want. Okay, so just getting a couple of pennies outside here means you're expanding the range. But once you have a couple of touch points, you can sort of draw it out and you'd be surprised at how many times you'll just see it go from here to here, back and forth, and eventually it'll break and it'll leave. Sometimes, and we've seen this before, let me make this smaller. Okay, sometimes you'll break out of the top and then it'll drop back in. That's exactly what we call it. We'll say you're dropping back into the range. Or the bottom. Sometimes it'll barely break out for a few candles and then it'll come back into the range. Other times it'll break through, come back and retest the range and then go lower. Or the same thing up here. Break through, come back, retest, and go higher. So those are things you got to know and look for. Let's see here. Netflix. All right, Netflix. Pretty strong move to the downside today. Let's look at a 30-minute. Oh, before I do that, you can see up here, right? That line is there for a reason. This is part of a bigger move, okay? It's part of a bigger move. Way down here is the bottom of the channel. Way up here is the top, and see how it's been moving? Let me see if I can squeeze this in. All right, so you got a couple of channels here. You got a couple. You have this one, and look how it was moving back and forth in there. Then when it broke this one, it came down here to the bottom of the bigger channel, and now look, it's come all the way back to the top. And what's it doing? Now it's starting back down. You guys see this? You see how often this plays out when people would have you believe that it's exactly the opposite? Okay. All right, so that was Netflix. Oh, I was going to go to the 30-minute. Let's see what it looked like on the 30-minute today. All right, just gap down when everything else was gapping up and just straight flush. This first hour, just straight flush. So let's look here. From where it opened, that's basically 420 to a low of 403.46. So about $16.50 in the first hour, just straight down. Look at that, just blew right through the 200 too. And then since then, it's basically been in a range. Okay. What else? Pepsi. Let's take a look at Pepsi, and we'll go to the daily. Okay. Let's see. No, nothing there. I think that was outside. Okay, but what we did have here, let me get in a little bit closer. What we did have here is the beginning of a 3-candle pattern play. So you have the strong, wide-ranging green candle. Here's your resting candle, and the best resting candles are dojis and spinning tops, and the upper 25 to 30% of this candle. And then what you can expect, we just had an alert go off on ES, it is now moving down. What you can expect is that, again, if the top of this gets taken out, this candle will have similar magnitude as this. Now this one was a little bit smaller, but at one time, right, this candle was way up here. Was way up here. Okay, so that's Pepsi. Okay, this is Stitch Fix, SFIX. Okay, we had a somewhat of a hammer. Okay, this is really more of a dragonfly doji. And what we would expect is that if the top gets taken out, we're going to see some upside movement, which we did. All right, but this is, let me stretch it out, make it easier for you to see. This is a price action play. We just talked about it before. So it did go up. Let's see where it opened. It opened at 17.05. It went as high as 17.30, 25-cent move to the upside. Then it turned around, came back down through. And again, the aggressive play is now you start thinking, wait a minute, the market's going down. We tried to push up. We couldn't do it. We're reversing. We're taking out opening price level. Okay, we've got this over here. This was a candle of indecision. Might we come back through the range and try to expand the range? Okay, and we did it, right? And then we've come all the way back in, right? So somebody might have went long here. Maybe they caught, it only, what do we say? It moved up 25 cents. Maybe they caught 20 cents, all right? Nothing to write home about. But then it comes back down through, and once it takes out opening price and starts going red, you can get in right there. That was 17.05. It went as low as 15.72, right? Okay, then it started to come back. You could have got out there, right? Now, that probably would have been enough for me, okay? But as you can see, it's come back into the range. So we have an outside candle. This will be on our watch list tomorrow. You will see this on our watch list tomorrow because now we're an outside candle. So we went from this is a form of a hammer. Okay, this is known as a dragonfly doji. right? And then we went outside. We went outside. So there was two potential trades there, going up, and then as soon as it started to reverse on you, you would have to get out, and then you could have got back in here and expected it. I mean, expected it, because the market was going down too, right? So that's why it's important to always be able to have your eye on what the market is doing. So if the market's tanking and this spiked up and then starts to reverse, when we know this is a bullish signal, right? We came off of a green candle, then we gapped up and we formed this dragonfly doji, okay? Then we took the top out, so that's bullish, but then the market starts to go down and then we reverse and start to go down too. You should expect that you're either going to go into this range pretty deep or what we have here. We took out both sides of the range. Price is trying to push its boundaries. Okay, I'll draw it in just like I have been so you can see it. Right? We are expanding the range. See how easy that is? Now, I don't have to draw them in. I do draw them in on a bigger scale. But if you do this enough, you'll just start to see it. You'll start to see it with your eyes. It's not hard at all. And it makes sense. I say this over and over and over again. And I know some of you, somebody like took it the other day and like said, I like what you said in your video, in your live stream. You said trading is nothing but common sense. That's all it is. Many, too many traders get caught up in thinking that some complex, intricate strategy is going to help them beat the market. No, it's understanding what makes sense and then putting yourself on the right side of that. I always say don't have a bias, right? It almost pains me, and there's even some good traders that I respect that they'll even tell people, yeah, I'm a long bias trader or I'm a short bias trader. I don't ever want to consider myself a long or short bias trader. I trade price action. And that's what I want for you guys. You should be equally nimble to trade long as you are short, based on whatever price action tells you, right? It gives us all the clues, okay, right here. These are clues. That's a clue, okay? This should be bullish. We started to go bullish. Then the market started to tank. You following me here? The market started to tank when we were up here. I know because I was watching this at the time. And then this started to follow the market. Well, then the market really started to flush. So once we come back under here, we can expect from a common sense perspective. We took out one side here. We're coming back the other way. The market's going the other way. We should expect that price wants to try to come here and test this side of this range. Boom. There you go. There you go. I can tell you right now, if that's a trade somebody would have took on this name, because these premiums are cheap, what was that, 1705 to 1572, and you wouldn't have got out there, right? It would have started to reverse against you. So maybe you get out at, let's even say 16 bucks. So you made $1. Let's say you made $1 here on a name like Stitch Fix options, or even if you were just playing the shares, $1 is a good move. You're going to make good money on that. You're going to make good money on that. All right, let's go back and look at the market. We'll come back and look at a couple other things. Let me get back to the 30-minute. Oh, by the way, look what we're forming with an hour to go. Look what we're forming. Okay. What is that known as? A Gravestone Doji, right? Okay, which is a bearish signal. Now, look, we had a shooting star here. We did go lower, and then we came back in, and then we took out the other side. Expanding range. All right, just because you see, let's say we end here. Let's say the day ends up like this. Doesn't necessarily mean we're going to totally reverse and start going the other way. Doesn't necessarily mean that. But what it's showing us is at the present time, and that's why we always say recent price action is the most important. At the present time, buyers drove the price up here. Okay, most of that was overnight. And sellers said, no way. It came back in, pushed it all the way down to here. Now we're kind of settling in right here. But if this ends up, okay, we got an hour to go. If this ends up like this, that's a bearish sign. This would also be on our watch list for tomorrow. So we would be looking for the bottom of this to get taken out to the downside, just like we would have been right here. Okay, and you could have caught, you know, some good move there. Let's see, 27.72.75. So let's just say 27.72 to make the math easy. It came down to a low of 27.55.25. And again, you wouldn't catch it all the way down there because it would start to reverse. So let's just say you got out here at 61 from 77, from 72 to 61, 11 bucks, $11. Then as it comes back through, okay, we've talked about this now about 3 or 4 times, as it starts to come back through, goes past your opening price level, starts to go green, an aggressive play. And all I mean by aggressive is that you just need a nice tight stop here, okay? But you would know at that point, now wait a minute, we tried, right? We expanded the range this direction, but now it's coming the other way, okay? The buyers are in control. We know that price wants to test the boundaries, okay? So once it goes past there, you can go long and then just keep moving your stop, okay? As price goes this way, you move your stop up a little bit. You know, if price is up here, you move it into profitability. Price gets up here, you move it up a little bit higher. If price gets up here, you move it up a little bit higher, so on and so forth. And then look what it did over the next 3 days. See that? Went clear up here. Now, it looks like, okay, now there's an hour to go. Man, this thing could ramp. We don't know. But I'm just saying, if it ends like this, then that's a bearish sign. So we just file that away for tomorrow. All right, that's all. So let's go back down and we'll look at some other things. Let's see here, where did we leave off? We left off with SFIX, Shack, Shop. Seeing if anything. Oh, yes, TTD. Okay, Trade Desk. This was on our list. This was on our list, okay? And why? Okay, because we had a Gravestone Doji. Let me show you how this played out. This was beautiful. I'm going to show you on the bigger scale, and then I'm going to take it down to the 30-minute. All right, so this is a bearish signal, bearish sign. If we take out the bottom here, we're looking to go short. So the bottom of this was 20.60.55, and we got as low as 252.07. So what is that? That's about 8 bucks. Okay, from there to there that we caught. And then what did price do? I sound like a broken record. It reversed, came back through. Okay, took out opening price right here, took out opening price and started going this direction. I'm sorry. We started up here. Okay, then we came down, we took this out, we went all the way down, and then we've come all the way back, right? Now we're back here. Now we're back here. Okay, so the play was down. The play was down, and now let me show you on a 30-minute. I'm sorry, I was getting a little ahead of myself there. Okay, look at it on the 30-minute. Gapped up, sold off, all right? We would have entered right here. Okay, remember I told you the low of the previous day was 20.60.65, right there. So we would have entered right here and taken this down. Then when this started to reverse, you know, we would have got out. Okay, we probably would have made, you know, I said this was from our trigger down to here was about 8 bucks, $8.50. We probably would have got out with, you know, 750, You know, if we're lucky, $8, but you know, $7.50 is realistic. Right there. I mean, again, 1 or 2 moves like that, you're done. You're done for the day, especially depending on what type of size you play. But even if you're a smaller or small-ish account, 1 or 2 plays like that, that's all you need. And you just keep doing it over and over and over again. Okay, then price started to reverse and come back. Okay, like the market did. This followed the market. Okay, just like everything else we were looking at early, reclaim the 20, right? And now, you know, the market, we just showed you a minute ago. Let's go back to the market. Okay, now the market just went red again. And if I go back to TTD, I can just type it in. Trade desk. Watch this. Okay, it went red. Because 80 to 85% of the names, on average, do exactly what the market's doing, just in their own price. Market flushed earlier today, so did Trade Desk. Market recovered, so did Trade Desk. Market just started to go red again, so does Trade Desk. All right, that's why it's so critical to always have your eye on the market. Those in the premium room, and I know a couple of folks in the premium room are newer traders. Maybe you would consider them novice from an experience level perspective. And it's one of the things I always try to drill into their head. They'll say, hey, I'm thinking about taking XYZ and I'm going to go long. It's a great long setup, blah, blah. The first thing I ask them, what's the market doing? If they ask my opinion, I'll say, I'd be careful, the market's moving lower, right? If somebody would ask me early in the day, hey, I'm looking at XYZ, it looks like it has a great long setup, what do you think? I would say, did you look at the market? Okay, have you looked at the market? If the market's heading down, I'd be really careful about a long. Doesn't mean you can't go long. There are trades that will go against the market. Okay, but they're going to be small. They usually stand out like a sore thumb. They can be good plays if you can find them, if you can identify them. Some people set up scans so they know which names are going exactly the opposite of the market. But for most names, and this is a perfect example, most names, just whatever their price is, they're going to trade just like the market. Market flushes, it flushes. Market recovers, it recovers. Market starts to go red, it starts to go red. It's that simple. It's not, I mean, don't overcomplicate the process. Don't overcomplicate things. All right, let's see here. Tilray. So Tilray was a name that I know at least one person in our community was trading today. I traded Tilray yesterday for 40% gain, so I was very happy with that. Okay, so here's Tilray. Tilray gapped up, immediately flushed, right? And then it kind of caught some support here, kind of recovered, kind of based, and then it's been dropping. Now, I gave 2 price targets. The person who was trading this, they know, right? Because they specifically asked me, they gave me their price target, and their price target was $7.50 to the downside. And I told this particular person, my targets were $7.70, and that's what I would call my T1, take profit, okay, and $7.40. And I even showed how I came up with it. So you see this red line across here. This wick, right? That's a medium-sized wick, and it was right at the start of this big move to the upside. So again, I know that from here up, lots of buyers, lots of buying pressure, okay? The bottom of this wick, I'm telling you exactly how I came up with this line, okay? And you're going to see how amazing this worked out from just, you know, being able to pick a target. Because this all happened before price was down there. The folks in my room, they know. Like I gave these targets before price ever came down here. But how I picked it out, this wick leading to this move up through here, it ends, its low is 765. That's the absolute bottom of the wick. I don't like to ever go all the way to the bottom or all the way to a moving average or all the way to a support and resistance level, so on and so forth. I don't like to go all the way there because the bounce can go against you. So I like to exit shortly before. So that's where I came up with 770, 5 cents higher than the bottom of this wick. And then 740 is just above the bottom, just above the bottom of this green candle right here. Okay, but I, and the folks in my room know, I'm ultra conservative. I'm always getting out on T1. I just think it's the smarter, more consistent, more highly probable play. Lock in your profit and get out. Because trust me, you were profitable here. Okay, and look what happened. So I gave these targets ahead of time. I even drew this red line in. Where did price go? Price went to 767. Never made it to 765, and then boom, big bounce. 770, you would have got out with a profit. That's why I do the things I do. Common sense. Common sense. Okay, this makes sense that this is going to offer support. And I just gave you the reasons why. It also makes sense that if it gets down near the bottom, it has a chance to bounce against you. Look at the momentum that was going into that. Okay, that's a chaotic candle. What's a chaotic candle? It's usually 2 to 3 times bigger than any candle on the screen. See that? So that is momentum personified to the downside. I mean, it's blasting to the downside, and as soon as it gets right here, what's it do? Big bounce. Okay, in real time, this thing was big green, and then it came down, then it rested, then it went higher. All right, but I showed that particular person and everybody in the room, because that person asked me, well, how'd you come up with that number? That's exactly how I came up with it. Now, if we would have broke through there, it would have made sense that we would have at least made it to here, and I wouldn't have wanted to get into this wick. Okay, so that's where 740 came. Okay, 740 is right before the bottom of this. 770 is right before the bottom of that wick. But I mean, this is the best example I could possibly give. I mean, that's a freight train coming at you, and it's like it hit a brick wall and just turned right around. It made it to 767. You can go up here and look at the top where it says low, 767. My target was 770. You'd been out with profit, and it never made it to the bottom of this wick, and then big bounce. That's how you pick targets, and I'm trying to give you the thought process. Okay, why here? Why here? Okay, because it's a medium wick, and this was the start. This is the origin of this huge move right up here. That's the origin of that move. So that tells you that down in here, there were a lot of strong buyers. All right? Hope that makes sense to everyone, and I hope that helps you. Let's look at Tesla, very popular name. All right, Tesla. Tesla actually gapped down, tried to push higher, and then it flushed away with the market. Okay, it regained with the market, and now it's falling with the market. So Tesla is just following the market today. All right, if you like to play Tesla. And let's see if there's anything else we want to look at. Let's look at Alta. Let's look at Alta. All right. Alta, okay, here's a name going against the market. Gapped up, went higher, came back down. Now, right here is where the market flushed. What did it do? It tried to go higher again. Then it came back down to the 20, and then the rest of the day, And here's a nice 45-degree climb. Okay, maybe slightly higher than 45-degree, but not much. But see how consistent this climb is? We would much rather see a climb like this than to see something rocket straight up, because if you're not in that, okay, then you're going to get in late, and then you're going to run the risk of exhaustion, and it's going to come back down against you. That's what retail traders do. And we don't want to think like retail traders. We want to think like big money. Whether we have big money or not, we want to think like big money. Big money takes advantage of retail traders. I don't want you to be taken advantage of. Okay, so this is much more controlled. It's easier to stay in. Like if you're a momentum day trader, it's a lot easier to stay in something like this. Okay, look, it never even came back to test the 20. It's just gliding above it. And I say this almost every time, okay, but just so you know, an easy way to know what 45-degree is from one corner of your monitor to the other. Okay, because 90-degree is straight up and down. 45-degree would be from one corner of your monitor to the other. So if you're anywhere close to that as you're rising or falling, that's good. That's a controlled trend. We love to see this. Look, we don't even have any red in there. It's just these medium, medium, smaller, 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 medium, medium, smaller, smaller, all green, all going up. Relaxed, right? Relax. You don't have to be freaking out about anything up through here. Okay, but Alta, again, is showing that it was strong when the market was weak, other than this one candle. But everybody else, no matter what their opening candle looked like, then it sold off with the market. But it didn't. It pushed higher, came back to the 20, caught support, and then moved higher. All right, obviously it looks like it's been a while since I've traded Alta. Let me show you guys. We may have some new people on here. I don't know how we draw in our support and resistance lines. Go to the 4-hour. Yeah, I got some up there. It's just been a while since I traded it. Then you switch to the line chart. Okay, that's going to eliminate the noise. Then we want to make sure we have our price level tool. Then we go to current price, and we're looking for every sharp pivot or bigger move, but we want to ignore the small moves and the chop. Okay, and if you want to know exactly where to put it, just hover over this and it'll tell you 208.20. Okay, 208.21 is good. If you're within 2 or 3 pennies, don't even worry about adjusting it. Okay, now let's see here. I like this because we have a little double top here. 215 on the nose. Okay, this one I'll have to adjust. Always go with the most recent. So if you have 2 like this, go with the most recent. Okay, now we come down here. Let's see here. This one is 201.57. 201.59, that's good. This is a small, let's ignore that. Let's go to this one. 187.55. Okay, this one I'll have to adjust. If you want them all absolutely perfect, you can do it. You just do what I'm doing right here. And I'm only going to draw in a couple more. We'll put one right here and then right here. So it's this one first. 156.57. And then this one is 179.71. 179.71. 173, that's good enough. Okay, then come back over here. Might have to adjust. Yeah, it's been a while. I need to adjust. Hang on. We do have to adjust. Okay, so I want one here, which is 221.21. So I'm just going to move this one down. I'll activate it. 221.21. If it's more than about 3 cents off, I usually just go ahead and make it perfect. But if you're within a few pennies, don't even worry about it. All right, this one here, 239.05. 239.05. Come up here, can eliminate this one, and let me see this one here. This one should be 256.78. So I just need to adjust it, 256.78. That's all I'm going to do on this one for now. So you come back over, turn your candles back on, go back to the time frame that you normally trade. For me, that's 30-minute. And there we go. Okay, we now have our levels, okay, as you can see. And then you can also, I'm not going to go into the whole, you can either look up the average true range, the ATR, because if you have gaps that are bigger, okay, if your levels are much bigger, okay, if they're only slightly bigger, don't worry about it. But if they're, let's say the average true range is $5 and your levels are $15 or $20 apart, then you need to add some levels. So how would you do that? I'm just going to show you. I don't really need to add one here, okay, but look at this. If I drew one in right here, that would make total sense, right? If I needed it. I don't really need it, but can you see? Respected here, okay, as resistance, respected here as support. Okay, respected here as support, respected here as support, respected here as support, so on and so forth, right? So I can draw that one in. I'll just leave that one there, but I can tell, okay, look at the daily range. Each time you see dotted lines, this is one day. So the daily range, 217 to 210, $7. Okay, here, 203 to up here, 212, $9, so on and so forth. Okay, from here, 210, and you just have to eyeball it, to 220, $10. Okay, so your average true range through here is probably somewhere around $9, approximately. Okay, approximately. So then when you look, as long as you're around $9 or $10 or $11, okay, your levels are good. Your levels are good. So we both drew them in and adjusted them there and showed you how to add one if you need it. Okay, if you need it. All right, let's go back. Let's look at ES, and then we'll wind things up. See, ES really isn't doing a whole lot. It's moved back down right here to our support level, 28.6750. All right, so here's the action today. Regular trading hours, it opened right here, flushed down, caught support, came back, put in a structure level, did not make a lower low, actually made a higher low, just barely. Okay, but that's a higher low. All right, so we turned around, right? We turned around. We actually went higher high, higher low, higher high. Now, if we put in another lower, or excuse me, higher low somewhere, we can expect price to continue to climb. If price starts to fall and we put in a lower low, okay, here was our last low. If price would continue to fall and we put in a lower low, then we would say we're still trending down. Okay, very simple. That's structure. You see this? So we moved down, lower low. Okay, then we came back up here. This is a lower high compared to there, but then we went higher low, higher high. And if it turns around anywhere before here, we would also have a higher low again, and then we would look for another higher high. Okay, that's just structure. It's basics. So if you don't understand things like that, I highly recommend just either Google or go to YouTube. YouTube is the best resource in the world. Type in candlestick basics, candlestick structure, okay, chart structure basics, whatever, things like that. Watch some videos on it. When it comes to candlesticks, I highly recommend a gentleman named Steve Nissen, Nison. Watch any of his videos on candlesticks, especially the ones on basics. Ignore his trading strategy. I don't like his trading strategy, but he is probably the foremost person on candlesticks. These are called Japanese candlesticks. We just call them candlesticks, but they're technically Japanese candlesticks. Okay, Steve, back in, I think it was the 80s, he was the one that really started to bring candlesticks to the forefront, and he has wrote book after book and put out videos, and he's done seminars all over the world. He's the foremost authority on candlesticks. So from just simply learning the basics of candlesticks, I would highly recommend any of his stuff. I would say ignore his trading strategy. Okay, he tries to trade using candlesticks alone, and you can do it. I've done it before. Okay, you definitely can do it, but adding just a few of these simple things in, it'll raise your probabilities up usually about 10%. And that doesn't sound like a lot, but we did it. I think we did it in our community one time, and I know I did it for somebody that I was mentoring privately. I showed them a 10% increase in your closing percentage can mean a 40% increase in your profits. So somebody might say, oh, well, if I only go from 45 to 55, or if I only go from 50 to 60%, they look at that 10% and they say, well, 10% is not that big. Okay, that's the percentage of your win rate. Your profits, if your reward to risk ratio is good, your profits grow much greater than that. So like I was showing this gentleman, we just did the formula out, a 10% increase at a relatively modest, 3-to-1 risk to reward, or reward to risk, because that's really what it is, reward to risk, 3-to-1, increases your profits by 40%. So these little things, support and resistance, supply and demand, just having some visuals on the chart to know, like I know this is 50% of this move, I know this is opening price level. Those aren't indicators. They're just visualizations. Or if it helps you to draw in, when price is either contracting or expanding, those visuals will help you make wise decisions. You increase that closing percentage by 5 or 10%, it'll make a big difference in your profits. Okay? All right. Thank you so much for joining us today. We're literally, I don't know that I've ever ended right on time. We're about 2 minutes early. If anybody has any questions, please ask it right now. I've got time if you need me to answer anything. And if there are no questions, then we'll wrap it up. So I'll give you just a minute or two in case somebody has any questions. In the meantime, make sure you give us a thumbs up, because that helps us with the YouTube algorithms, right? Okay, the more thumbs up we get in relationship to how many people who viewed it, then they think, okay, people like this, they're going to recommend it more often. Subscribe to the channel. Okay, definitely subscribe. That helps us. And we're only like 1 or 2 away from 100. We just started this channel a few weeks ago. We're already up to that first milestone of 100. They claim that that's like one of the hardest ones to get. So if you haven't subscribed, please subscribe. Get us over 100. And then definitely turn on that notifications bell, because anytime that we go live with these live streams or upload any new videos like how-to videos or anything, you'll be notified, and then you'll know that there's new content on the site. And this is all free on here. And once again, if you want to learn more about us, go to simpletradinglife.com. Either check us out in the free chat room, or you can even join our premium room. Very, very affordable. It's only $97 a month, and we get really in-depth in there. So, okay, I don't see any questions from anybody. So thank you all so much for joining us. Again, thumbs up. Help us out there, and we will see you on Friday at 2 p.m. Bye-bye.